and the Economist with Shawn DuBravac, Chief Economist of IPC. Shawn, how are you? Good to see you again.
I am great. Good to see you as well, Phil.
Good stuff. So let's just start with some of the reports and some of the numbers that have been out recently from the IPC. Obviously book to bill trends are what people tend to look at as kind of an immediate thing, and they tend to reflect what's going on in terms of sentiment. When we look at what's been going on quarter by quarter, there's been a kind of a constant softening. People are talking about recovery, wondering when. A lot of people are talking about the second half of the year. It kind of feels like, well, that's because we're in the second half of the year. Where do you see things based on the numbers that you reported earlier this month?
Yeah, and I think if you look at the North American market, there is a softening that is taking place. It feels like it's been generally gradual thus far. So there's just been just a general, slowing of orders. Initially, early on, as those orders slowed, it allowed companies, both in the PCB and EMS sectors, to work on their backlogs, which were significant because of supply chain challenges that had kept orders still high, but order flow, but production low. So I think early on, there wasn't as much concern simply because they had a tremendous amount of backlog. I still think companies are in pretty good shape, but definitely things are slowing. I anticipate that to continue through the back half of the year. The economy is slowing. And so there's a natural downward pressure from that. I also think that there's a tremendous amount of uncertainty, especially in the U.S. market, with uncertainty around a presidential election. I think people will be holding off significant investment until they get better clarity on what that looks like. So really, I think they will wait until 2025 at this point. If you're looking at a major investment, you're just going to hold off for another 6 months. There is, I think, a lot of money sitting on the sidelines waiting for better clarity. There is still a lot of momentum towards nearshoring and onshoring. There's a tremendous amount of construction going in place. So there are factories and facilities that are being built, and I think will be deployed in the coming years, regardless of who is president. So all of those forces, suggest to me that the demand will still be there, but in the short term and in the near term, I do think that we've seen some softening.
Yeah, it feels like a bit of a hiatus. I'm interested with what you say about the presidential election, because when I look at their industrial policy, and we're going to come on and talk about tariffs later in the show, but it feels like there aren't huge differences between their strategies. They both feel like they want to protect the industry in North America. They want to promote the industry. They're happy to use whatever trade tools they've got. When you talk about that uncertainty, do you think, concern that if it goes one way or the other, it'll have an impact on that reshoring trend?
Well, I don't know that we'll see a significant shift from the reshoring trend. I think that momentum is going, and it's really difficult without significant policy intervention to change momentum like that, because you're talking about hundreds of millions of dollars, billions, even in some cases, going into these mega projects. These are long-lived assets, factories and facilities that people expect to be here in 40 and 50 years. And so you don't make those types of decisions lightly. You only make those in an environment where you're confident that they make long-term sense. And so the investment that I think you see going into some of these long-term commitments, that will continue regardless. But I do think there can be a little bit of wait and see. I mean, obviously, if you think about like the EV market in North America, it was growing significantly in 2023. I would argue it's still growing significantly in 2024, but it now has a larger base, and so the growth rate has slowed, and
Yeah.
adoption is slowed, and so some of these big projects that were tied to the EV market have dissipated. Some of them have gone away. You've had some EV manufacturers, exit the market, and not continue. So obviously their factory commitments will go away. I think others will backfill those and take up those opportunities. But if you think about, especially regionally, places like North Carolina, South Carolina, Georgia, Tennessee, we've seen a lot of investment around the EV infrastructure
Mm.
going into those areas, battery facilities, car facilities, and so some of that will slow. And so I think some of the investment in those areas will naturally back off, but I don't see it being heavily influenced by the presidential election, just because they're looking at really long-term trends
Yeah.
when they're making those investments. Now, there could be motivation to delay for a certain amount of months just so that you get better clarity. You don't know if the next president, whether it's a continuation of President Biden or if it's President Trump or if it's somebody totally different. I mean,
Mm.
we would have never
Yeah.
thought
Can't rule that out.
we would have had that conversation, but a few weeks ago, I mean, if you look at the futures markets and the prediction markets, there's still a lot of uncertainty about who will be the nomination on the
Yeah.
Democrat side, whether they'll win or not. Right now it looks like President Trump will win, but we don't know how those will fall out.
Yeah.
So either of the candidates, and regardless of who president, they could decide to implement new incentives in the new
Yeah.
year. And so if you're looking at making, a major investment, you might want to hold off just a
Yeah.
little bit to wait and see if there might be some richer incentives on the other
Yeah.
side of the new year.
Yeah, and also cost of money and those kind of economic
Definitely.
things, they all have an impact. So I think people do pause and people do take a hiatus and think about that.
Yeah,
So
if you look at the Federal Reserve, for example, I mean, you've had central banks elsewhere in the world already starting to cut rates. The futures markets certainly look like the Fed will cut in September. I
mm,
think Chair Powell has been talking in that direction. Inflation's now in the twos, which it hadn't
mm,
been, and so we're starting to get into that comfortable area for the Fed. I think in recent days they've been talking about the risks being pretty well balanced between inflation and labor markets. So now they're starting to pay a little more attention to growth in the economy. So we probably see, a cut in September, probably not a cut in November because it will happen right around the election, and I think they want to avoid making any moves during the election. But then I think we see another cut maybe at the December meeting. And so your point about the cost of money, that probably starts to look a little bit better in the new year. And so I do
yeah,
think that there's a lot of reasons to
yeah,
you know
delay
to,
those big
yeah, the companies
investment
are
decisions.
delaying, and there are a lot of unknowns. I mean, if you look at just this week, President Trump announced his running mate. His running mate, as a first time senator, has been quite outspoken about supporting Ukraine and
Mm,
has not been a supporter of Ukraine. So does that cause a shift in defense spending? Trump's been
mm,
kind of quite outspoken about Taiwan recently and their own defense investment and how they should support that broader initiative. So I think that there's a lot of uncertainties when it comes to kind of where those investments might need to show up as well as,
yeah.
especially when you think about defense, which is obviously heavily influenced here in the North American market.
Yeah, yeah, it's a big deal, and it's not just the US that's in an election year, so there's a lot going on that causes that hiatus and that little bit of a delay in terms of what's going on. Shifting from the pure numbers that you put out, you also do your sentiment analysis, which is out for the June period. Give me a kind of overview there of what the important findings are, but also you've started to ask specific questions in those, and I think you did that around China, I think, on this occasion.
We do each month we run a sentiment analysis, looking at companies globally, how they're feeling. I think it is a very good gauge at directionally where companies
Mm.
see the markets going. And we also always try to include specific questions, and look at risks of things like recession or concerns around other things. Um, you know, this month we asked about concerns around China uh, dumping, for lack of a better term, goods into their market, and we do see across the globe a high percentage, nearly 70% of respondents are concerned about China goods ending up in markets that causes a decrease in price. I think there's a lot happening there. If you look at what China is trying to do to stimulate their own growth as their
Mm.
economy slows, they're obviously stimulating manufacturing. As much as China has tried to move away, over the last decade or so from manufacturing, they're still highly dependent on manufacturing. They're close to 18% of global exports. So, still a very large share
Yeah.
of the global economy is materializing in China. And so, as you stimulate different sectors of that manufacturing, if you don't have enough domestic demand to take it, to consume that, then you do
Mm.
have to look at other markets that will consume that. And and so, I think there is a lot of concern around China moving goods and hard
Yeah.
goods from any of these categories, electronics, but electronics isn't the only place. I mean, there's other areas. We saw the U.S. recently put tariffs on steel
Mm.
to combat that. So I think there is a lot of risk that China will be stimulating their domestic economy, and as a result, that could result in Chinese exports moving to other
Yeah.
markets and compressing pricing in those markets.
Yeah. And I think what's interesting, Sean, is no election there. So industrial policy that they can fix long term and they can stay with, and that's an interesting differential. What I also think is interesting when you look at the sentiment, less concern about the shortages that we'd been talking about several months ago. So less concern about shortages in terms of component supply chain, less concern about shortages in terms of talent as well. Talent remains an issue, but it's not the high level of concern that it was before, and perhaps that's related to maybe a little bit less pressure in terms of inflation and wage inflation as part of that. But that seems to have eased off in that report as well.
Yeah, and I think it's continuing to ease off. I think what you're finding in our sentiment analysis is that the risks are becoming more balanced. If you look, 18 months ago, there was every company was reporting that they were facing rising labor pressures, both in terms of cost and availability, and then also just rising pressure on materials. So you saw material costs, labor costs both going up. Availability of labor was tight, and so we have seen that ease. I think more easing will come. Just as the economy relaxes a little bit and softens a little bit, that will help. Um, Globally, though, the economy is still holding up pretty
Mm.
well. We anticipate about 3.2% growth this year. That's in line with last year. So while you do have pockets of areas that are slowing down, Europe
Mm.
notably, you've had a couple countries, UK and Germany, kind of moving in and out of recession there,
Mm.
along with others. Finland has slipped into a recession. So you have little pockets of recessions in Europe, but then other places, Turkey, India, have grown much stronger than we had anticipated. The U.S. has grown much stronger
Mm.
than we had initially anticipated, and so you do have growth holding up. I do think it slows a little bit, and so some of that is materializing in the sentiment. What surprises me though is when we look at some of the demand indicators, things like backlog, capacity
Mm.
utilization, orders, those have all in aggregate, taking those collectively, those have held up pretty well. So, demand seems to people seem to be pretty happy with where demand is. It could always be better,
Of course.
people always want it to be better, but at least I don't see in the data yet a strong concern where companies are saying, "Hey, we're having to lay people off. We don't have the volume to support the work. We're looking at shutting down." You
Yeah.
probably hear that a little more, and obviously Europe faces other challenges. I imagine the challenges there are a little more acute than they are in other parts of the world,
Yeah.
uh, but overall, I think sentiment has actually held up pretty well, and in many cases, the outlook has been pretty strong. So you see that not only in our analysis and our research, but you also see that from a number of the Fed divisions and their research. When you look at the U.S. by region, you see a number of manufacturing surveys where things are kind of, there's a period of malaise right now,
Mm.
but overall they're actually optimistic about the
Yeah.
outlook, and so there is definitely some tailwinds when it comes to manufacturing more broadly.
Yeah, and I think everybody sees a really strong tailwind in terms of demand for electronics generally. So,
Yes.
whether that's through AI or through data farms or because of EVs or whatever trends, there's certainly an overall confidence in the electronics market. And if you convert that to EMS, that's a percentage of that market, and it's still actually not a huge percentage of that market. It's still probably less than half globally. So the TAM for EMS companies could grow as they win more of a growing market. So there's a decent potential upside. I
Yeah,
completely
and
agree with you about
yeah,
Europe. I think has different challenges, and bumping along the bottom is what a lot of European countries do during recessionary periods rather than the sharp V. So I think we're seeing some of that.
I think the other thing that you see is that the sophistication of electronics is becoming more complex. And so I think there will be a demand for companies that can handle a high level of sophistication. We're not just making simple simple boards and putting them into simple electronics. Like, they're starting to get pretty complex. When you
Mm.
even see where AI is showing up, it's not just the infrastructure needed to support AI, but it's that we're building technology that's got AI embedded in it, and so there is a high level of sophistication in these. We're using NVIDIA camera units that can do real-time sensing of your environments and other things like that, and then translate that into actionable tasks. Like, there's a lot happening in these, and they need it to happen in near real time. And so I think the complexity of electronics is going to become more pronounced. And so EMS providers that can really handle that type of complexity,
Yeah.
I think, are going to be very well positioned.
Yeah, and I think it's exciting when you think about it from an EMS point of view. You're in a position where um, AI is going to impact the products you produce, but it also is starting to impact the way you produce those products. And I want to talk about AI in another episode, so we'll come back to that. One of the topics that I really wanted to zoom in on a little bit today is the topic of tariffs. I've been listening to some podcasts and reading a bit about tariffs, and I'm always curious about tariffs for a couple of reasons. One, how well do they work? Two, who ends up paying for them? Is it the consumer? And when I look at it in the electronics industry, and I think of tariffs as, maybe combating some of that potential dumping that we see from elsewhere. The third question that comes to my mind is, are we so addicted to low cost product that it's going to be really hard to shift mindsets? So let's start with, do tariffs work? From an economist point of view, what's your kind of overarching view on tariffs?
I think in some instances they can work. They rarely probably work to the full extent that you expect them to. So, it kind of nets out in the middle. It does obviously impact the market. And so I think if you look at tariffs, especially when it comes to the US, it might not necessarily mean that production moves to the US. But in the case of China, it certainly has meant, and if you step back to 2017 when Trump implemented a number of tariffs against Chinese goods, and then Biden, of course, kept these in place, and in some instances, as I noted, steel has ratcheted them up. Uh, China has definitely lost market share in terms of imports coming into the US since 2017. And it's been pronounced in a number of electronics categories. So you see other countries benefiting, you see other countries in Southeast Asia benefiting. So, Malaysia, Vietnam, even Laos, Korea benefits, Japan benefits on the margin. Mexico ends up being a big beneficiary as well. So you start to see more goods flowing through Mexico. Now, in many instances, China might still be tied to that supply chain. They might
Mm,
be partners. We've seen China investing more in Mexico as a result of some of these tariffs. Regardless of who is president next year, I think these tariffs stay in place, and
yeah.
that shift will continue. Some of that shift can't happen right off the bat. So there is clearly a shift that has taken place, and I think there is still more shift to take place as sourcing relationships evolve and change. And I do think the U.S. benefits, but other countries, notably Mexico, also benefit significantly from some of these things.
Yeah. So when you look at a tariff and, for example, 100% tariff on Chinese EVs is a bit of a big headline. When you look at that tariff, does some of the supply chain, does some of the Chinese supply chain absorb some of that cost to keep those products competitive? Is it all paid by consumer? And if it is all paid by consumer, does it bring us to a situation where a BYD is more expensive than a Tesla? So we buy a Tesla, so market share shifts, in which case it's probably been a successful tariff. Who ends up paying?
I think everyone ends up paying, and again, it depends a little bit on the individual market. I mean, I think the scenario you laid out is accurate, that if the company in China doesn't change a single thing and they just raise the price, then you do see an environment where the prices are higher for those Chinese imports. Um, Early in a tariff's life, you typically see Chinese companies trying to absorb it, not passing those costs on to consumers, especially in the US. We know consumers are extremely price sensitive, and so they're not likely to pay more. And then over time, you do see, the shift to other players, other markets, moving goods through other places. I mean, flat panel televisions is kind of a great example where even a small tariff on flat panel televisions coming into the US pushed a tremendous amount of that supply to Mexico. So
Hmm.
even today, many of the flat panel televisions that are being consumed in the US are being imported through Mexico. Now we know that the panels for those aren't being produced for the most part in
Yeah.
Mexico. So the parts and components are probably still coming largely from Asia, and there's enough happening in Mexico to qualify it for uh, for tariff-free import into the U.S. And so I think that also happens. Now Mexico benefits from that, and I think we'll see that when it comes to EVs. Uh, I think the supply chain from there is much more complex. If you take a non-EV vehicle, for example, it's not uncommon for pieces of it to be manufactured in Mexico, some of it to be manufactured in the US, and things to travel back and forth. I've
Yeah.
seen statistics that suggest, the car before it is finished has moved across the border 7 times
Wow.
to have a little bit done, and then a little bit done in the US, and a little bit more is done in
Yeah.
Mexico, and then it all comes together. And maybe it's all coming together in the US, maybe it's all coming together in Mexico. And so the EV supply chain in North America has been, as I noted earlier, is being built around the more of the eastern states. So you're seeing a lot of that show up I mean, Texas has some, but you see it showing up in the Carolinas and Tennessee and there's been a lot of investment in Georgia in this area. I mean, Georgia as a state has in the last 3 years hit record numbers of investment commitments. So there's a lot of companies investing in facilities in Georgia. And so I think, tariffs on EVs for North America will probably see some of that shift to figure out how to better incorporate what's happening in Mexico,
Yeah.
and Mexico will become a bigger player in that. Obviously, Mexico is already a very big player in the auto
Yeah.
industry. And it isn't just the US. We've seen EU also implement tariffs right now, provisional tariffs. So they're temporary, but we could see those become more permanent in the next 4 months. So Europe is a bigger EV market. I think it's noteworthy
Yeah.
that they're also trying to protect their domestic production. They don't want to see low-priced, inexpensive EVs flooded in those markets, even though they're arguably a much more progressive market when it comes to EVs than
Mm.
the US has. I mean, you've got a number of very big goals that they're trying to achieve in
Yeah.
many of the European countries. Some have, restricted where non-EV cars can drive. And so you've got a big push to have EVs. And, obviously the car culture is a little different in
Yeah.
Europe.
Yeah.
Uh,
And
taxes on cars are much higher in many places, but
I think it's interesting when you look at some of the European brands that they're trying to encourage more loyalty towards. You look to Scandinavia, you look at a company like Volvo and think, yeah, that's a Swedish brand, but it's owned by a Chinese company. So, it's complex. But when you look at it from a government point of view, Sean, I guess all you've got is you've got tariffs and you've got subsidies. So when you look to protect something that may be strategically important and at critical mass, like the printed circuit board industry, those are the tools that you really have, short of insisting that certain products that are perhaps in the military or in aerospace have products that are made in the US. All you can do is apply a tariff or a subsidy.
yeah, and I think you see that happening in the EV market. Obviously is nascent in North America. It's a little more mature in Europe, but broadly the automotive industry is considered strategic in both of those markets. It's obviously an important market in Europe, and there's a great legacy of car manufacturers and vehicle
Mm.
manufacturers in Europe, and obviously the same is true in North America. And so, as a result, you've seen both of them, both those regions put tariffs on EVs. I think in support of their domestic production, but also in support of a nascent market trying to develop, because you really need, especially when it comes to EVs, you need the ecosystem to come
Yeah,
together in order for it to be successful. So I think that's some of what the EU and the US are trying to protect, is the development of that ecosystem to get all
yeah,
all players together. And you have seen great announcements. You've seen a number of foreign companies announce EV related projects in the US where they're going to build plants, they're going to build batteries have been a big one, but also
yeah.
EV chargers and other things being built in that market to support that market. So
Yeah, and I think that trend towards regionalization is a good thing in terms of sustainability and in terms of long-term security of supply chain. So I think that all makes sense. Last question on tariffs and last question before we wrap up. Do you think, you talked about the US being perhaps more price sensitive than other markets, and I kind of feel that that is the case in many instances. Do you think we've got to shift our addiction to low cost products to really create this correction in the supply chain? Or do you think we can do enough in terms of automation and process development to become competitive with
so
those global markets?
I actually think both are happening. I think if you look at the younger generation, they are willing, and now this could change as they age, as they mature. But when it comes to jobs, they're inclined to take a job, and they want a job where the organization that they're working for is aligned with their own social views and their own social values. And in many instances, this, Gen Z is willing to take lower pay in order to work for a company that aligns with their social values. And so I think the same is true, that they're willing, if they think it's important to support a domestic economy, then I think they might be willing to, to pay higher prices or to sacrifice in other ways. So some of that might happen.
Mm.
Now, we'll have to wait and see as this, as this audience matures and as that segment becomes a bigger segment of the buying population, if that really happens. And at the same time, Chinese industrial infrastructure, their manufacturing capabilities and capacity are aging, and so they are becoming less efficient than new capital that's being deployed. And if you think of all the new factories that are coming into to North America, those will be and should be the most efficient, most productive factories in the world. And the same is
Yeah.
true, obviously, for new factories that show up in Europe or anywhere else in Asia. These
Yeah.
should be highly automated. I think they will be, if not highly automated, they will have a significant influence from technology. Technology will play a much more significant role, and so you will see, productivity and other enhancements, efficiency gains from that. And so
Yeah.
there could be a narrative there where the cost delta isn't as significant as it might have been, especially if you're not considering, the upfront capital costs of that. And then, you've got again, just going back to my earlier comment, the level of sophistication of some of these technologies are going to
Yeah.
require some level of automation, I think.
Yeah. Yeah, I think it's interesting. You reduce the delta in terms of the price, and you have a generation with a different sentiment towards how their products are made and where they buy, and if those two come together, you end up with a purchasing pattern that reflects a more regional manufacturing pattern, which I actually think in the long term is good for everybody. It raises living standards in all of the places that manufacturing has done, and it creates good sustainable jobs in those regions as well, and it's good for those markets. So fascinating stuff as always, Shawn. Thanks so much for your time. Let's get this as a monthly cadence so we can dig into the sentiments and the numbers that you're seeing, but also touch on some of these topics that for a non-economist like myself leave me scratching my head, and we can dig into your expertise. Thanks so much for your time.
Yep. See you soon.